Welcome to Introduction to Trading Session 2. My name is Raman Gill and I am founder of the website tradingwithvenus.com. In this session, we will take a look at what is Forex and Forex trading. We will take a look at the drivers behind currency trading. Why does this market exist? We'll also take a look at why anybody would be interested in trading Forex, and most importantly, how to make money in Forex. Before we dive in, just a quick disclaimer. This is for educational purposes only. If you have questions about your individual investing needs, I recommend you go talk to your investment advisor. All right, so let's get started. What is Forex? To be able to understand Forex, let's imagine you are going on a vacation. So when you travel to a different country, one of the first things you would need is the local currency. So let's say, for example, you are traveling from US to Europe. You would go to the airport and you would go to one of these currency exchange kiosks and you would exchange your dollars for euros. Congratulations, you have just participated in Forex. Forex is short for foreign exchange. It's also called FX or currency exchange. The trading of currencies is referred to as currency trading, FX trading, or Forex trading. Now, why does this market exist? What is the reason that currency trading even exists? There are a few reasons for that. One is trade between different countries. So we all know Japanese cars. So when a dealership, for example, or a company would buy Japanese cars, when cars are made in a Japanese factory and then they are sent to the US, you would have to purchase those cars, you would have to pay for the delivery on those cars. So that transaction there would need you to exchange currency. You would have to exchange US dollars for Japanese yen. That's one of the reasons for this market to exist. A person needs to be able to sell US dollars and buy Japanese yen, and that is a transaction or a trade right there. We also have a lot of multinational companies. Let's take example, for example, Philips. Philips is a company that is in different parts of the world. If you go to China, you'll probably have Philips there. In the US and Canada, we have Philips. In Europe, we have Philips. They have locations all across the world. So let's say Philips was based in North America in the US. When Philips has to consolidate everything. At the end of the year, they need to consolidate their statements, their financial records, and they need to bring profits home. They would need to exchange currencies. For example, let's say they're located in Japan. They would have to sell Japanese yen and buy US dollars so they can bring the profits to US. And if they are in India, for example, they would have to sell the rupees that they have made all their sales in, and they would have to buy US dollars to bring the money back home again. Again, all of that consolidation, the year-end activities would actually require exchange of currencies in different part of the world so that that company can then have that common currency, the currency of their home country. Another reason for this market to be present are the mergers and acquisitions. Let's say, for example, Procter and Gamble chooses to buy Mitsubishi. They are in Japan. So for this activity to happen, they would have to come up with whatever the value they have placed on that company. That transaction there would require currency exchange. You would have to, again, sell US dollars and buy the other currency. Let's say going back to Japanese yen, you would have to buy Japanese yen so that you can pay for that company in the local currency. That is a third reason for this market to exist. And fourth reason would be speculation. So that would be traders like you and I. This would be big banks that use currencies as a form of trading for profit. This would be hedge funds that do the same thing. They buy and sell currencies looking for profits. Now let's take a look at why anybody would want to trade Forex and not something else. So the most important thing here is it's the largest traded market. It has a turnover of over $5 trillion per day. Now, if we compare that to the New York Stock Exchange, New York Stock Exchange only has a daily turnover of around $50 billion. So compared to the New York Stock Exchange, this Forex market is humongous. This is also a highly liquid market. And what that means is that when you put your order in, you're able to get that order executed right away. You don't need to wait for your order to be taken in. There are so many participants in the market and there is so much activity in the market that you will always be able to find somebody to take the other side of the trade. And having that capacity to be able to liquidate your position or to be able to buy or sell your position, that's a huge benefit. It's also a market that's open 24 hours a day. So you can pick the time that you choose to trade. Now, there are different sessions that you can choose. The Asian session that starts at 6 p.m. Eastern. There is the London session that opens at 3 a.m. Eastern time. And also the New York session that opens at 8:30 a.m. Eastern. However, the market, even though I have described 3 different sessions, the market is open 24 hours a day. So you can participate in the market, you can place trades at any time that you like. The only times that the market is closed will be on weekends. So the market would close around 5 p.m. Eastern and then opens around 5 p.m. Eastern on Sunday. So they would close on 5 p.m. Eastern on Friday and then they would open again on 5 p.m. Eastern on Sunday. So that's the only time period on the weekend that the market is closed. Other than that, it's a 24 hours a day market. Another reason to participate in this is the amount of leverage that you can get. So let's say, for example, you wanted to buy a stock. Let's say the stock costs $100. So now in order to buy 10 stocks, you would need $1,000. So you would have to have $1,000 in your account to be able to purchase those stocks. However, in Forex, you can start with a trading account as small as $200. With this $200, you can get a leverage of about 1, 2, 3, 400%. And what that means is that you can trade 100 times the size of your account. And the brokers will lend you this money to be able to place that trade. And when you close out the trade, you get back the profit that you would have made on the trade. Now, I do not recommend trading 100 times the size of your account. However, you do have that option of getting started with as little as $200. And you also get practice account. Most brokers will have practice accounts so that before you actually get started and put your real money at risk, you can actually practice. You can develop your trading strategies. You can take time to practice your trading strategies. And then once you're confident that you're able to turn a profit, then you can actually engage with the real money and engage in the market and actually buy and sell based on real money. The last benefit that I will talk about today is flexibility. You have the flexibility to trade from anywhere. You don't need to be in a certain country of the world. You don't have to go to the office. You can trade from home. You can trade from the coffee shop. You can trade from the beach if you're able to get an internet connection there. Basically, you have the flexibility because all of the trading takes place online. There's no central exchange for Forex. Everything is done online. There's no physical location. And because of that, it gives us a lot of flexibility to be able to trade from anywhere that we choose. All right, so finally, how do you make money in Forex? Vacation time again. Let's take a look at going on vacation again. For example, let's say you decide to go to Paris. To be able to buy something in Paris or do things, participate in activities that require money, you would need to convert your US dollars to euros, which is the local currency there. Now, let's say once you landed at the airport, you went to your foreign exchange kiosk and you exchanged $500, and for that you got 450 euros in return. You go on vacation, you have a great time. 1 week later, you come back to the US. And again, you go to the kiosk and now you still have your 450 euros. Maybe you had great friends there and they covered all your expenses while you were there. So you're still left with 450 euros. So you go to the kiosk and now you want the US dollars so you can spend in local currency. As you exchange your money, you see that instead of getting $500 that you had originally exchanged for 450 euros, all of a sudden you get $550 in return because the exchange rate has gone up. So there you go. There's a quick profit of $50. You didn't have to spend any money on your vacation and you made $50 in profit. And that's how you make money in profit. When you buy and sell a particular currency, as the exchange rate goes up, you're able to then make profit on that. Now, how does this translate to online trading or online forex trading? That's where we participate in the market. So essentially, it's the same concept. You buy and sell currencies. However, the difference here is that you don't have to go to an airport kiosk, or you don't have to go to a currency exchange store to be able to buy and sell currencies. You just do it online. You have a broker account and you place trades online. And the best thing about it is that you can do it from the comfort of your home, in your PJs if you so desire. So there you go. That was a brief introduction to Forex and how you can make money in Forex trading. In the next session, we'll take a look at how do you actually get started in this market and how do you place trades online. In the meantime, if you have any questions or you would like a free strategy session with me, please feel free to email me at raman@tradingwithvenus.com. I look forward to your questions. Till next time, this is Raman.